Alright, hello and good morning traders. Well, it could be any time that you're watching this video, but I wanted to go ahead and run over something with you, show you a little advanced pattern, something to help you maybe benefit your own trading here over the next time one of these may appear. I've been trading a little bit the S&P this morning. I've made a little bit of money, but not a whole lot, as the market's been largely range bound. But we've got a position open with my that I put on this morning. I didn't want to put it on last week because we had the holiday season, but now that holiday season is over, the long weekend, and we're back to trading, and I did want to come in and put it on this morning. And so I put this trade on this morning, and I want to show you guys the pattern formation here. And let me just adjust this. Got E-signal 11 here, and it's working really well. I'm really liking the new E-signal. eSignal.com. They don't pay me. That's not an endorsement. That is just who I use, and this is just an example of their platform. So for the 15 people who will email me and say, what platform is that? It's eSignal. I'm going to default. I'm going to set this as the default. Okay. And then I just want to draw this pattern in. This is a bat pattern, as is evidenced by the formation that I'm drawing for you now. And on this particular formation, what we're looking for, guys, is for this market. I'm bringing in my Fibonacci retracement now. What we're looking for is for this market to retrace, for this leg, this last leg, to come all the way back up in here into an 886 retracement. And the 886 coming in right there, you can see it. Against these. Let me see if I can make this, pull this out just a hair so you can see it a little bit better. 886 coming in right there, 117.39. I got one short at 117.44. Now I'm looking for this market to pull back. My initial targets here are 116.32 is where I'm looking at going for those initial targets. Now, this is referenced not only by the congestion that we have right here. You can see the market retesting that zone several times. So as the market comes back down, the market comes back down in there, I want to be looking for long, to cover part of my position down in there. And then, of course, we're going to let the balance run and see where this market ends up taking us. If I go ahead and consolidate my chart, you're going to see that the overall market is still bearish. I mean, we're still down, and if I bring in my trend line here, let's just see what the trend line looks like here. That's what I thought. We broke through that little trend line there back in here, and now the market's pulling back down. So our initial targets are also sitting just on top of that trend line, what was previously resistance from these last two highs, and which now may become support. So this is another nice little indicator of where this market is likely to pull back to if it does. But overall, the market is still bearish. We're still heading down, and this is a bearish bat pattern. So we would be looking for, again, for this market to continue lower, at least to come back down to retest those 116.30s. You can look left and see some of the structure that exists right around that zone. So it just seems like a pretty good place to look for those initial targets. But let me fatten my chart back out again for you guys. Anyway, I just wanted to show this to you guys, let you see the power of these formations. And actually, if I switch over here, you can see that the pattern recon software picked that up. Don't ask me about the pattern recon software. I don't sell it. So this is just something that I wanted to show you. Pattern recognition software picking that one up really nicely as well. But anyway, just wanted to show this to you guys. Now, this is keep an eye on this. Basically, this is what you want to write down if you're going to write it down. 50%, 618. 50% retracement, A to B, 618, B to C. This one's a little bit deeper, doesn't matter. Caught the 886. Now we've rolled over. We take out small positions on these swing trades. If you're trading a $5,000, $10,000 account, which most traders are, you trade small. Got 4 minis out there. We're about $150 right now. And when we come down to target 116.32, we'll look at taking that position off about 100 pips, so about 200 pips of profit on the first half of the position. and then I'll look to trail my stops after that. But just a quick video there, Euro-Yen on the 4-hour chart, bat pattern. Go ahead and grab the chart, draw it in for yourself, learn to recognize the patterns. Patterns pay. And guys, learning the language of the market. This is what it's all about. I don't know whether this is going to be a winner or a loser, but I can tell you that that is a valid trading signal to the short side, and we'll see what happens with it. So until next time, guys, good luck and good trading. My name's Jason. I'll talk to you soon. All right, everybody, and just wanted to do a little update here. As you can see, market has rolled over here. We are breaking structure. Let me make this fatter. Let's make it big so everybody can see it. As you can see, we're breaking structure. Now look at the structure that comes in here. This is what's really important. This is what's really nice to take a look at here. Let's zip this up here. There's kind of your support level. That's your basis. And as you can see, the market tested, boom, breaks free. And we've actually broken below the lowest low. We've broken through that. Now, here's the important thing, is it is almost 2 o'clock. We've got a little over 2 hours left in this 4-hour candle. We have not closed below this low. In order to confirm that this market is going lower, we need to see a break below, close below this previous low. And as we come in, we got about 5 minutes left. And if we drop down to the 60-minute, let's just see what we've got. Even on the 60-minute, this all happened in the last hour. As you can see, market rolled over, then we rallied all the way back up again, and the emotion that goes along with that. I was up 120, now I'm down 20 or 30. Now boom, now I'm back down. I'm up 280, 290 pips now, or $290 now. The emotion just starts to, can really take a hold of you. But guys, got to maintain your discipline. You got to maintain, guys, that's what kills traders. That's what kills traders. It's not the fact that you don't have a system. You may not have a system, but more than likely that's because you're undisciplined. You haven't bothered to sit down and actually develop a strategy, write out a trading plan, test that plan, and then put it into action. And so it's no wonder that you continue to lose money. And guys, again, I don't know whether this thing's going to be a winner or a loser, but I can tell you most traders are going through an emotional train wreck when they're watching themselves be up $120, down 30, up 290, $300. We're trading small here. We're trading, 4 minis. Tiny. $300 here, down 20. The whipsaw. And pretty soon they're just like, oh, man, I was up 120, then I was down, so now I'm back up $300. I just got to take some profits off. And guys, that type of behavior is what will kill you as a trader. You've got to maintain that discipline. So the first marker that we're going to be watching out for is here at the 2 o'clock candle. If we get to close below, break below, close below those previous lows. And then we have to wait until actually 4 o'clock Central Time, which is when the next 4-hour candle rolls over, to see if we actually get a close below there on the 4-hour. But for right now, targets are still in place. 116.32, stops are still in place. If we get the break below, close below here, may make sense to tighten the stops up, because we don't need that wide of a stop anymore, because we've had the the little channel that's in here, and now we've broken below that. So if that ends up happening, may want to go ahead and roll those stops down. Could even bring in a break even, although that may be a little bit aggressive. What we may do is just bring them in right underneath these last cycle tops here. Because now what do we have? Take a look at it. Again, structure leaves clues, guys. You have to be aware of this. Market does. I'm just going to draw it in for you. So easy, guys. So easy. The market comes down. Boom. Boom. What do we have? We have a lower high followed by a new structure low. Lower high, new structure low. What does that mean? Well, it means that the market is now, its intention has shifted. It has gone from bull continuation to bear continuation. Now we're looking at the market to be bearish. If in fact this does happen, and I'm not saying that it will, I don't know. But what I'm saying is as you begin to analyze some of this stuff, you can make some predictions as to what's going to happen. So stops no longer have to be at all the way up here. We can bring them down to just below that cycle top. Now look at the risk we've cut down on there. We could potentially still take a loss, but it's not going to be a very big one. From 44 to 670. Very, very minimal risk, especially because we're trading small. And so, guys, these are some of the things that you should be thinking about as you're moving through the trade. Now, I'm going to go ahead and move this back up because we haven't technically hit our level yet. So we'll go ahead and roll that back up. And then we're just going to keep watching this. I'll keep giving you the play-by-play on it, but I want you guys to to be aware of this movement that's happened and also what's happening currently. What's the most recent move telling us? And it's telling us that the market sentiment is shifting. And of course, we ended up getting into this position very, very quickly, very early, because we have an understanding of ratio and pattern recognition, because we can see the pattern as it's occurring. And we know where the high probability trade is going to take place. We know where the market is likely to terminate, because the patterns tell us what is most likely. And so if this market does end up rolling over here, if we end up hitting our initial target, it's going to be a nice winner for us. But clearly here the market is showing its bearish intention. And we'll have to wait and see whether or not that ends up paying off. So stick around. We'll be back in a few minutes. All right, and right back here, close the hourly candle. You can see it closing well below, even below the cycle bottom right behind that. So going ahead and moving those stops is probably in my opinion, is a good decision to make at this point. We're going to protect ourselves. We're going to eliminate some of that risk, and I'm just going to go ahead and drop this down here to about 67. So we're going to take a big chunk of our risk right out of this, and now if the market presses down, great, and if not, then we're going to go ahead, we'll end up taking a very, very small loss on this trade, which is great, guys. If you want to win big, if you want 200, 300, 400, in some cases 700 pip winners out of the market, well, you've got to be willing to take on a little bit of risk. You've got to accept a little bit of some 200-point winners that are going to end up pulling back 50, 60, 70 pips before they end up proceeding on. If you cannot handle those cycles that happen in the market, for example, right here, get this huge rally up, then the market comes back, very shallow pullback. But this could come all the way back. We get a much deeper retracement here, and then the market rallying. You see that right here. Look at this downward move that happened, followed by this retracement. If your stops are super tight, you miss the entire down leg. And guys, as you can see, even inside of patterns, we have patterns. Copy, if I can do it. Paste. Just going to drag this over, lay it right down in here, and look at that. AB equals CD. I'll bet we've got about a 618 retracement there as well. Let's go ahead and draw from swing high. Whoops, get the right tool out. Let's go ahead and draw from swing high to swing low. Oh, right there, almost at 618. Didn't quite touch it, but almost a perfect ABCD pattern. And guys, this is the power of understanding market structure, of understanding the language and the ebb and flow of the market. If you understand it, if you understand the skill of trading, you will never worry about making money again. You just won't. Because you understand how to read the market, you understand how to read a chart, you understand what the market's intention is. And you understand that before 90% of the market players. So anyway, I'll go ahead and leave this alone. We'll come back and see if we end up hitting our target or not. So stick around, stay tuned, we'll be back. And back after the overnight, as you can see, target 1 did get hit, 116.32 the target on that, and now we're sitting here, just kind of churning here as the market made its move over the London session, and now as we're getting ready to come into the New York, so it's about 5:45 Central Time, that's 6:45 Eastern Time. Here in the United States, and so I've just gotten into the office, and as you can see, that initial target's hit. Now the second target I've got down here is coming in. I've got about 1532 is where I've got that target at. But there's nothing wrong with just continuing to trail the stop as the market comes down and puts in a cycle top and rolls over and hits that. Nothing wrong with just continuing to trail that stop. So you don't even, if you've got a balance of your position on, you don't even have to have a target for that if you don't want to. You just let that thing run. and rolling the stops. As you can see, we've rolled our protective stop, our stop now sitting right above this swing high, and as the market comes down, trades sideways and then drops down again, well, what do we have there? Well, we've got a great little level to put a protective stop in. And so not only have we secured, 112 pips on the initial target, but we've also now protected an additional, looks like about 40 pips or so to guarantee us making money on the balance of the position. So this is exactly what we're talking about, guys. Patterns pay. Patterns pay. Structure leaves clues, guys. You'll hear me say it again and again. Structure leaves clues. And, ratios work. They just do. And so this is just, I won't make this video any longer. You guys can, if you want to, when you see this video, can finish following this trade out and just see where we end up going with it. But I wanted to put this together for you guys so that you could see the power of this. You could see it real time. You could see me walking through the trade as we went. So you'd understand, basically the process that the trader goes through when analyzing the chart and going ahead and taking the position out. So, guys, thanks so much for watching the video. Until next time, good luck and good trading. We'll talk to you soon.